corner, there's the comments. Hey everybody, we are live. This is the Real Estate Braddahs, and today we are going to be talking about some April real estate statistics, landlording news, and whatever you guys want to talk about. If you guys want to chime into the comment section, either my Facebook page, Dean's page, our YouTube channels, the raaloha.com Facebook group. However you guys want to interact with us, please do. We are lonely here, and we are drinking some beers tonight. What are you drinking, Dean?
I just got some Miller Lite can.
You're a
How about you?
classic guy. I got this fancy smancy beer from Hanakoa.
Oh
Actually,
wow!
people can't see it, but
Is it green? Is it like there's a green screen like it's
it is.
invisible?
It is. There's a green guy on it, but it's the George Imperial Stout with coffee, cocoa, vanilla, and lactose.
Oh, fancy.
Fancy, fancy. I don't drink that much, but when I do, it sure is expensive and strong. But
That
let's run this.
sounds.
In Hawaii, there's so much to do. There's hula, there's surfing, and real estate too. We just two local guys with so much to say. So listen to the Real Estate Braddahs today.
All right, Dean, just take us away.
Hey, we're getting really elaborate in our production these days, huh, Lane?
Yeah, we got like 9 people watching so far, just
Oh,
a minute
cool.
and a half in.
And like you said, with this new platform, we can be more interactive too. So, yeah, if you guys want to comment, ask questions, please do so. And in the various venues, hopefully it'll come directly to us. Yeah. So I think on what episode number we're on 39 now. So this is our 39th episode. So hopefully by now everyone knows us, right? My name is Dean. I'm a real estate professional, former CPA, now real estate investor and realtor. So jumping into April statistics, fresh off the presses. This came was released today by Home Board of Realtors. So the trends are still nothing new. We haven't broken any records though in the month of April. We have on the single family sides prices going up. Single family median price at 928,000, an increase of about 15% from same time prior year. Closed sales 375, which is a big jump. At It's a 51% jump, but that's all because of same time last year. This is when the big uh, when COVID hit and everything started shutting down, right? And that's when those first few months is actually when we saw the big impact on the real estate side going down before the big spike up. So not really big news, but days on market still riding at 9 days on market. And on the townhouse condo side, we have still a seller's market, but not nearly as strong as a single family. No change at $450,000 for median condo. Closed sales 88% jump at 645 closed sales, and days on market not much higher than um, the single family at 13 days. Yeah, so same trend in terms of strong sellers market these days, and why is that? So I like in the prior months, I like to look at these charts and not pay attention to the numbers, but like just looking at the graphs going up. So seasonality wise, I mean, we're hitting spring and we're getting into the spring and summer is typically the hot times, and we're seeing that bump up this year too. Yeah, so we see on the graph it's starting to go up, which is a good thing, right? So no complaints there, and so for the overall real estate market, that's great. Another great thing on the next slide you'll see is new listings, and so what good thing is that we're seeing those start to come up, right? So for condos we had 706 in April and 459 for single family. So that's always a good thing when new inventory is coming on market for our buyers. However, if you go on the next slide, which is months of inventory, what's coming on market is still because sales are still so high. what's coming on market is still not enough to give us a healthy inventory. So we can see, the on the charts, the trend is still on a downward or level, um, trending areas. So that's kind of not so good for overall. I mean, again, if you're on the seller side, it's great. You're the demigod, right? We talked about that before. But when you're on the buy side, it makes it really challenging, and yeah, that's it's it's rough. But I mean, for you buyers out there, my suggestion is to stick with it, and pair up with a good realtor so that you don't look so sad like MJ in that picture. But yeah, I'm sure everyone hears a lot about this in the news. As soon as the report comes out on the sixth day, it's blasted over the news, and especially nowadays, right, with it being such a ultra sellers market, and everyone's like, "Oh, their prices are so crazy." Um, but that's how it is, and so I actually want to talk about other things in our this episode. So this one, for landlords, is kind of good news. Depends how you look at it, right? So I think this is a few days ago. The U.S. District Court over in D.C. have ruled that it's unlawful for this eviction moratorium that's been set, and this is actually a nationwide statement. So in the highlight, you can see the question for the courts was, does the Public Health Service Act grant the CDC legal authority to impose the eviction moratorium across the country? And their summary was, no, it is not. So that's a good thing for landlords, not for the tenants who are hurting. Um, but at the end of the day, the question is, if you do end up being able to um, initiate the eviction, then how are the courts going to be? Because as of last month, the courts were still, backed up, and so the judges were putting low priority on these evictions, knowing very well that this is like, guess having I don't know if it's like empathy for the tenants or whatnot, but in terms of prioritization, that this would be something that's not as high on the in the court system, so that's the challenges the landlords have these days. Even though with this, which is good news for the landlords, the next step is execution, trying to get it through the court system so that you can then serve the tenants and actually get them out if they're not paying, right? So that's
How long does it take for somebody to evict somebody here in Hawaii?
so we have the moratorium here too, yeah. So and it was extended. So right now there isn't any evictions going on. So people who are having trouble with their tenants, in my mind, the best thing to do is try to see, what you can get from them in terms of, if not full payment, partial payment, try to catch up, because there's really no way of just getting them out of there if they're not willing. And maybe here, not so bad as the mainland. I think in some parts of the mainland, there's a lot of people who work the system and they know how hard it is or the time frame in terms of the eviction process, and they actually totally abuse the process. And so that's why it's very challenging sometimes. And you got to really make sure you have a good property manager to be able to, sniff those people out when they're trying to fill that vacancy.
The Californians. No, that's not how it is in the South and the Midwest, right? I feel like there's just a different mentality, call it hard work ethic or whatnot, but it's just not really the case.
And again, it you think that it's not here, but I've heard stories talking to property managers here too, where it's like they're sad to say, but there are people locally who try to work the system down here too. So again, having a good property manager who can kind of sniff them out, do their due diligence, find out, because a lot of that vetting out is besides the credit check, besides um, interviews, you're calling the references, right? The prior landlords, and you seeing, what's the situation and how has their history been going. So that's kind of that's a big thing, I think, for trusting your property manager to doing it, unless you're doing it yourself. But that's on you, right?
Yeah, I think the losers here are the mom and pop landlords, right? I don't
Yeah,
think you should be doing it on your own. Hire a
and then
professional.
I mean, the challenge too is, what do the landlords, what can they do if they have like a mortgage? Or you can request from your lender for forbearance and stuff, but then that goes and messes with your credit too, right? And then that you're trying to refinance or anything like that, that's gonna shoot you in the foot too. So it's kind of like, okay, I understand, the lowly tenant who's hurting, that makes sense, but then it's kind of junky when then the landlord who has a mortgage has to do something, right?
Yeah.
We have a comment from Go Mark Go. It says, I lost 30K on the mainland last year due to eviction protection laws and tenant working the system. I agree. Get a good property manager. Thanks, Go Mark Go, for that. Yeah, I mean, that's that's a tough thing, man. And
What I'm curious what state that was in.
hmm, let's see if we get a response for that one, and we'll stay tuned for Go Mark Go. We'll see where that is. So segue into a next part of what I wanted to talk about is avoiding reverse mortgage scams. So reverse mortgages in general, they're not to say that they're bad. Oh, there we go, Florida. That was in Florida that Mark had that issue. Um, so this is not any way a slam on reverse mortgages, because in itself, I'm not saying they're good or they're bad. The reason why this popped up in my head was because I don't watch too much TV these days, but I jumped on the other day during the day, and Tom Selleck pops up in front of the screen, and he's I guess he's a spokesperson for one of the reverse mortgage companies. So, and I'm not saying that he's a scam at all, but I'm saying, reverse mortgages in general, they may or may not be good ideas depending on your situation or your, these older folks' situation. But there's actually scams going on regarding reverse mortgages. So this is kind of more like a heads up for Lane, maybe like people like us who are watching out for our parents, or if you're one of the older ones that are going to looking towards a reverse mortgage, you got to keep these things in mind. And since the COVID pandemic, I think scammers are always out there, and they're trying to take advantage of whatever opportunity. But there's been cases where either a trusted family member or caregiver is trying to get the homeowner to apply for a reverse mortgage, or even impersonating the relative for that process. Another one situation is straight up fraudulent, where they're getting the homeowner's ID and then trying to take out these loans and get a handle on the funds. We have people who are getting these reverse mortgages, and then someone coming in to tempt them to sell them on this can't miss investment that or do these repairs for their homes. So there's all these issues out there, and so the point is, be wary, yeah, and not only for yourself, but if you have parents or loved ones older than you, you need to be aware of this, and they need to be aware. The biggest thing is education, right? So another random thing. Lean, on the next slide, you talk about tips, right? So overall, you don't want to get a reverse mortgage just because a contractor is telling you this is you should make these repairs. And keep in mind that reverse mortgage loan officers aren't they're not allowed to give you investment advice. Yeah, it's separate. Yeah, the lender versus the financial advisor. And if you are looking for reverse mortgage opportunities, same thing like any other service provider. Talk to more than one, interview them, and yeah, always consider that. Yeah, and you always want to go with somebody like and trust at the end of the day. Yeah.
But
Kind of
the fact that like people have all this equity in their home is like, this is a very common issue, right? Like people are house rich but cash poor, so they get to the end of their life. Maybe one of the spouse dies. It's typically the guy, right? Because guys don't live as long, and you
Yep.
have the widow, and all they have is this money in the house, and the widow doesn't know too much about the money, so they kind of get coerced into these types of things because the only money they have is tied up in the home. So you only have these types of options, which I'm not a huge fan of either.
Yep.
But
No, I was just talking to a friend today at tennis, and he was mentioning, he just recently retired, and after right during COVID, he pulled out a bunch of his money from the stock market, and he's sitting on some cash, I think, but he's scared to put it back in, and everyone is kind of has their own decisions to make in terms of financials, and that's actually have a slide later on to talk about that a few slides later. But yeah, point for this thing is, yeah, you gotta just be aware of everything. LL Cool P 22, how's it going, man? That's cool. But kind of on a related note, though, the whole thing about watching out for our parents. I don't know, Lane. I think your parents are a little bit younger than me, but my parents and my in-laws, they're in their 70s now, and it's a point in time that we need to watch out for them, making sure that sometimes a lot of times we think our parents are independent and they're okay, they're educated, and they're not going to get duped. But oh man, just in this last month, I heard about two situations. One of them was one of my friend's father got duped out of 8 grand, so like 6 grand on one transaction, 2 grand on another, and it hit the credit card bill. But when they asked the father, what is this for? He said, "Oh, this is for IT consulting to protect my CPU." And you know, the the kid looked into it, and he looked at the vendor, and yeah, sure enough, it was a scam, and there was no way of recovering it because it was on a credit card. I had another friend who caught his father coming back from Walmart. He had hundreds of dollars in gift cards that he had amassed, and he was going to mail it out. And then when the child asked him, "Oh, what are you doing?" and he's like, "Oh, he's mailing out to someone who said they needed help," right? And that's the thing with GCs is kind of like the credit card thing. You can't track that, yeah. So that's we got to be aware. And so for us, for our parents, we got to make sure we're planning for the future, right? Hopefully our parents are setting up trusts, power of attorneys at the point in time they're at not sound capacity. And then we need to know what are those triggers that kick in kick these things into action, in terms of do they need to get what is that, assessed by one, sometimes two doctors to determine that they're not of sound mind. And there's a lot of services out there. Even the U.S. Postal Service has a mail tracking system where you could see what mail is coming through to, say, your parents' house or whatever. Another thing you can do is get on your parents' checking account or credit card so you can see their statements. All these things, just watching out for them. Yeah.
the thing
So
I put into the chat, if people are interested in wasting a lot of time on YouTube, you can search trolling scammers, and it kind of talks a lot about how these scams work. How either one or two things. They get really pissed at you, and they kind of scare you, and then of course then they tell you to go to Walmart, Target to get all these gift cards to send to them, or they make you feel really bad for them. They're like, "Oh my God, Dean, my boss is gonna fire me," and then now you're like, "Oh no, well, let me go get those gift cards for you and send them in $50 increments,
yeah,
to India or Bangladesh or where the heck these guys are."
yeah.
I put that link in there if people are interested.
Yeah, I mean, I think we talked it on a previous episode too. I was looking into SIM swapping. You remember that, Lane? I forgot if it was on this one, but SIM swapping is the SIM cards on your cell phones. So scammers will reach out to like an insider for like a cell phone company, pay them like $500, $500, and say, you swap out this SIM card and give that person access to someone's phone. So basically, it'll then brick my phone, and they will have access. So if you're doing things like online banking, They could access your bank if you're doing, you know, the what is it called, the two factor authentication.
Yeah,
So now you have your phone and possibly your email. So that's the two factor authentication. So then now they'll have access to your, your bank accounts or whatever. Because a lot of times the two factor authentication, they use a text to your cell phone or an email, right? Or a call to your cell phone. So all those kind of things are, and more things to be aware of. But anyway,
yeah.
I digress.
Anyway, just drink a beer and
Yeah,
relax.
it's
Yeah,
exactly. So for the last point that I want to talk about is just some food for thought. Right now it feels like is a good time for, we had just had May 4th and May the 4th beauty, but I feel like, there's a lot of imbalance in the world right now. Whether it be the real estate market, how it's going crazy, stock market, how it's like still, well, I think there's a hiccup today, but how it's going off when kind of doesn't really make sense when you have countries like India that is hurting so bad. But all this government spending going on, and so, like I said, I was talking to a friend, and they're like, kind of, holding on because they don't understand what's going on and why is the market going up, but they could potentially be missing out. But there's two sides, right? Cash is king, but I think you need to be active from the standpoint of and I think you're gonna talk about it later too. I was looking at your slides, and thing like talking about inflation and stuff like that. So, I mean, we don't want to be curling up in a ball. We want to make sound investment decisions, but we want to keep on moving forward, right? Because it's at these points in time that it's opportunity. There's a lot of opportunity. So, and some sellers, investors and stuff don't have any intention of selling now because they think the market is crazy. But my point is keep an open mind, and you got to leave emotion out of the process. You know, think of what that number is, that maybe there's a property that you're thinking of selling and you have a number. If it was ever at this number, then yeah, maybe I consider selling because that's just an outrageous number. But now with the market how it is, we may be at that number, so you may want to consider looking at it. Prime example is Lane. I know you're always ragging me about my Chicago rental, and you're like, get out, get out, get out. So I'm gonna get out, and that's a lot of because the prices have gone up, and the rent rates haven't gone up proportionally. In fact, they've gone down from the pandemic. People are moving out of downtown Chicago, so now that rent to value ratio went down, and does it really make sense? So I'm actually gonna plan to divest of that property.
amen. Let's go to Las Vegas to invest, of course.
Well, I thought we went to go play. I want to go Vegas too.
That too. Well, people want to learn more about investing, especially on the mainland, can check out my podcast about passive cash flow. And I think that's part of the problem, Dean. Is yeah, you got a whole bunch of equity sitting in your house. What are you gonna do if you sell it, right? Just sit on the cash. I
Yep.
mean, a lot of times people just don't know where to put it. Is the problem. Um, so that's where you have to educate yourself and learn. So a few teaching points is we always like to educate folks. So when you sell that rental, Dean,
Mhm.
what did you buy that Chicago rental for, and what year?
I bought it for I think 149 about 5 or 6 years ago.
What are you gonna sell that thing for today?
We're listing it for like, I think we're gonna list it for like 215, I believe.
Okay, so maybe after commissions you walk away with 200, and so
Yeah,
minus 149. So a capital gain of 50 grand.
possibly, yeah, around there,
Okay,
give or take. Yeah.
okay. Any improvements that you've taken? Maybe,
Not much, not much. It
yeah.
was,
Okay. And then so you held it for what, 5 years then?
yeah, about there.
So you're probably looking at a depreciation recapture of maybe 15 grand. I'm just guessing
Yeah,
about
yeah,
there. So
sounds good.
you're looking at a tax. You're gonna have to like your AGI is gonna basically go up by 65 grand. So when you sell that thing, you gotta make sure you got your passive losses to offset that.
Yeah, and a good point. LL Cool P22. I tried to call into one of to that one lane. I couldn't get into the one LL Cool P called into also, and it was all filled. So
Uh,
I'm waiting for the replay
well,
for that.
I'm too cheap. I don't want to pay for the 200. person
Oh, yeah,
out
it
there.
had 100
And
and it was capped.
yeah, and that's why I don't want to put more money into that program because we it's putting money into the StreamYard, which is actually kind of cool.
Mm.
It makes like we're hanging out with LL Cool P and
Yeah,
Marco Go.
it is. It does, and hopefully, LL Cool P and Go Margo, they're having fun too, right?
Yeah, yeah. So on this deal, I put in as a LP 60 grand. I got 47 grand back as losses on this one.
Oh,
So
nice.
this one would have pretty much gotten everything for that Chicago sale that you were looking for. Um, it's a K1 form, by the way.
That's a year
Um,
one of your K1. Yeah,
yeah, yeah,
got it, got it.
and
So you guys did a cost segregation on that one.
yeah,
Got
and
it.
I'll be the one person that kind of says, "What the heck are people doing with all these like remote burrs? Right? You're giving your money away to some bozo who's not a partner. He's just a vendor. It's just a matter of time before a deal doesn't go as well, and he starts to steal your money, and you have no recourse because you're 100% remote. What are you doing? Paying an inspector, right? These guys are not partners to you, and at some point, they're going to choose their family over you, which is why I don't do burrs. And if you want to learn more and act more like an accredited investor, go to simplepassivecashflow.com/burr to learn the cons of that. So this is another thing that's coming up: exclusionary zoning policies. So this is stuffed away in the stimulus plan. So there's a lot of this is sort of controversial, right? So this is like the not in my backyard premise where you got your nice areas and they don't want to put like low income housing in it. And I think we have this in Hawaii, right? Like Core Ridge is going to have some low income stuff. Milani's got some. Um,
In fact, Kaka'ako just approved about 650 one tower, two towers. They approved it in Kaka'ako, and one of them was 650 doors or 650 doors for Howard Hughes, and that one tower alone is supposed to um, be the Howard Hughes's requirements for their low income.
yeah, yeah, and I think in Hawaii, I think things are you have a nice balance of like low, medium, and high income in our neighborhoods. I feel like for the most part, but the mainland is a lot more segregated, not racially, not saying that, but like
Mhm.
economically. And part of it is like they have these harmful land use policies currently, and right now the White House is working to kind of remove that. Um, Basically, they back traditionally when you have this type of stuff, the not in my backyard premise happening, you have crappy areas and you have really good areas, right? You have the projects basically. Um, Maybe Kalihi is kind of like that, right? Because they basically stuck all the low income in the
Mm.
one area.
Yeah, yeah,
But
yeah.
the trend is to kind of combine things a little bit better, so you don't have projects anymore. But what this is ultimately going to do for investors is if you can find properties in more affordable areas, like we try and find those kind of lower than the average places in good neighborhoods, right? So we like to ride that wave with the neighborhood. Um, but something to be aware of that's stuffed away in the stimulus plan. Um, oh, and so this is talking to your buddy there, Dean, that is stuffing cash away.
Mm.
What I do know is like the loser will be the person who is sitting on their cash not doing anything. Because right now I'm paying almost more than double the price of lumber, and look at all these commodities prices just going up and up and up, and it's because of all the stimulus money coming in. And this
Right.
is how the government pays back their debts. They do a little bit of tax inflation, but they're mostly just inflate the monetary supply. So if you're somebody who's just sitting on your cash, you're going to be the loser. And
Right.
I'll say it like exactly. All the older people, right? They're kind of getting screwed over if they don't get their money working.
Mm.
And on a lighter point, rents do. If you're a landlord, rents are starting to go back up after being stagnant for almost a year. Here are some macro trends with population. We've heard this many times. People are moving out of the high density areas such as Los Angeles, California, Bay Area especially, and they're moving to a lot of these places like Phoenix, Austin, Las Vegas, Dallas, Miami, Atlanta. I gotta trick you into going into Vegas, deal with. We gotta just buy some whimsical property, so I have an excuse there to write off the trip.
I'm game, dude. Oh, I do. I told you I have property over there, right? So, but
You know,
it's sitting in my self-directed. So actually, there's no. I, I can't. And technically, I can't travel there to write off that trip.
yeah, that's why I don't like these self-directed IRA accounts. You can't use
Yes,
any of the tax
yes.
benefits of it, and you get
Yeah.
the tax benefits if you're investing in real estate anyway. So I don't know why anybody does these IRA things.
Was that a
Anyway,
loaded question or what?
it's not. Anyway, let's keep moving on. But
Yeah.
anyway, with Las Vegas, right? I've been watching all of these YouTube videos of like Circa. Have you heard of that? That new one? Um, it's like the next to Fremont downtown. They have this like
Oh.
stadium pool that's downtown,
Oh.
and then they also have like this new Resort World thing, and they're building this orb that's like a theater.
Oh.
Like,
Well, I still haven't been to Top Golf. I know you're not a golfer, but I still want to try to go get into Top Golf. And I know it's not only Las Vegas; they have them all over the country, but I still haven't been there yet.
yeah, I mean, it's been a while since I've been to Las Vegas. Maybe we'll
Me
take
too. I'm
everybody
Jonesy.
there.
And you got your shot, right?
I've got one of them.
That's right.
They don't care about folks like me. Yeah, I'm last. When San Francisco, or where San Francisco folks move to, this is a Bloomberg article. They're basically moving out of the San Francisco, LA area into Las Vegas, Phoenix, Tucson, places like that, and then of course the Dallas, Austin, Houston story, as always. Um, See, Dean, that's where we got to go to Las Vegas. But Las Vegas doesn't last long, so it'd be a kind of a dumb investment. But
But that's just like buying the Porsche, right?
yeah, I mean, at least this one gave an excuse to go to Las Vegas and write off some
Yeah.
airfare. So here are the red states: California, Kansas, North Dakota, Illinois, Ohio, New York, and some of the other ones that are small are losing people to outbound migration. And some of the top 10 states with inbound migration are Idaho, Oregon, and South Dakota. There's probably more people in San Diego than the whole state of South Dakota, Arizona, Arkansas, Tennessee, Alabama, Florida, South Carolina, North Carolina. And the reason why I say all these is for our friends on the podcast. We can also check this out. We also put this on our podcast on a weekly basis. And here's a little fun thing I made for folks. This one was like my most popular social media post of the last 2 months.
When I saw this one, I cracked up, man. This is hilarious.
Did you get it?
Yes.
All I did was like I switched this one around from some other drug.
Oh,
I don't know what it
that
was.
must have not have been a drug. That must have been something. It had to be something positive for
It
that
was
one.
something like high school or college, I think what it was prior, but I couldn't
Wait.
resist myself.
Were those other 3-1 drugs too, or
Yeah,
were
these
they...
are drugs.
Okay, so that
Yeah.
one was something positive and healthy.
Yeah. Yeah. No, I think it was the opposite way around. He was smiling and then he was frowning.
Well, you
And
flipped it.
I flipped it, and it was something not as bad as alcohol, cocaine, or heroin. Yahoo Finance says Fed holds rates near zero, but notes rising inflation as U.S. economy strengthens. So yeah, here's another folks saying inflation is here. Year-over-year rent growth. This is what I look at a lot. Where are the rents growing? Yeah, population growth and job growth is one thing, but what ultimately is the indicator is how much are rents going on. And this is, I don't really look at like residential home prices because that's just like emotion, right? Rents are like what the average person is paying per month.
Yep. Shout out to Evan. Evan, he just stopping by. Yeah, I remember Evan. We went to that breakout room, right?
Yeah.
And shout out to Evan. Thanks for the DM.
So here are some ways that you're going to start to see things get overheated. Investor Mania 2.0 is what we call it. So single family rental landlords, this is the rise of a mom and pop investor who has some cash maybe take some money out of the HELOC, and let's go buy a property out in Kaka'ako, right? That is incredibly non-cash flowing, but because we put so much freaking down payment on it, we're cash flowing anyway, right? And we all shake our head, very awkwardly, or when they say like, yeah, exactly, or when you go when the guy who's like, oh, I just bought a rental property, I paid 100% down, and I'm cash flowing great. You're kind of like, all right, whatever. But anyway, the house flippers, right? The house flippers are kind of more gamblers, and then you start to see more of the mom and pop flippers get up. They drink a Sam Adams Light, and they watch a HGTV, and they get after it, right? They think they can flip a house. Foreign investors and second home buyers. I think we have a lot of this in Hawaii, right? Like you get the Japanese, Koreans coming over buying a house.
Yep.
And then homeowner helpers. Yeah, we get a lot of this too. The parents kind of help out folks get the down payment.
Oh yeah.
This is a graph of average units absorbed per property across the United States. And I fudged this up yesterday. So what's happening here is absorption went up May of 2019 and slowly came down, and it's kind of been teeter-tottering up in 2020. So another indicator from Rent Cafe is the top 30 hottest rental markets.
These are always fun.
Yeah, this is how quickly a property gets rehabbed. Or not rehab, but absorbed, like a tenant gets in there.
So the lower competitive score, the better?
Yeah, less days to fill the damn thing.
Oh, got it.
Right? So if you're my property manager in Huntsville, Alabama, and the thing stays vacant for 2 months, you point here. It's like, what's up, dude? Like, average vacancy days is 27 days. You're 2 times that. What's going on?
Right.
Looks like the problem is you. We need to fire you. We need to get it. Warren Buffett is right. Inflation is running rampant.
So we don't want our cash sitting in our checking accounts because we're losing money if that's the case, huh?
Right, or even debt equity in your home.
Oh, that's even... Well, theoretically, at least we get the appreciation play, right?
Well, you get it whether you have 10% of equity or
Good
50,
point.
60% of equity, right? And I think I would make the same mistake, kind of not thinking too hard about it too.
Right.
This is another one. Secure 2.0 is like something they're talking about in the next stimulus or whatever plan they're coming up with. So I don't know what this is going to be. It's like the next rendition of the damn 401k again, which the 401k, all that did was unlocked all this money to go into all these like Fidelity and Charles Schwab, Fidelity, all these kind of brokerage companies could get rich off these mutual fund Frankenstein products. So we'll see what happens. Right?
Yeah.
Oh, I think we're gonna come on to the end of this. I released something big this week, Dean. I released the new YouTube channel. And you know how we always talk to mostly accredited investors that come to the meetings these days? Well, this was more of a meeting or a channel to help out the young guys. Folks like your nephew that just graduated college. What did they do? They don't have any money yet, but what did they do with a 401k, Roth, or do they buy a house, right? So that's what this Rich Uncle channel is.
Oh, perfect. Okay, cool. I have a good place to direct. When I do my high school presentations, I have a good place to point them out to too now.
Yeah. And if you guys like this, you guys can check out more at our YouTube channel and REI Aloha. And we are not giving any legal or financial advice here. And now's the chance.
Or tax advice.
Or tax. But if any of you guys still got any questions, any comments, put in the chat now. This is kind of the free-for-all section. But what are you working on this month, Dean? People write out their last parting words.
Well, like I said, Chicago trying to divest in that. Actually was able to refinance a couple of my doors over in Kansas City. This earlier this month, and hopefully trying to refinance a few more. Um, Looking for more opportunities, actually, Lane. Now that you mention it, with like how you mentioned the whole thing with inflation, and with the fact with Chicago hopefully going to be divesting next month. I need more opportunities to invest in, and I freed up some of my well, sort of freed up some of my 401k money. I put it into a solo 401k, and I'm sorry, I put it into yes, a solo 401k, so I'm not have to worry about UBIT and all that stuff. So I'm looking to for opportunities to put that into too. Um,
Right. That Kansas City stuff. Did you get like a portfolio loan, or how'd you pull
no, it
that?
was actually refi Fannie Freddie. Yeah, just a just
Okay.
went, yeah, I went to a national brokerage, and they're gonna do two. I was trying to do more, but I'm waiting. We have to file our tax returns because um, I quit the W-2 job uh, 2 years ago, so not filing the second year tax returns. I'm not showing the income on the real estate sales side, so I have to wait to file that before I can refinance because of how we hold title in some of the properties.
Yeah. I was getting a car loan last month,
Mm.
and they just couldn't figure out what was going on with my
Yeah.
taxes.
Oh my gosh. I mean, it's yeah,
I could imagine getting a home loan.
it's yeah. The refinance is pretty painful, but fortunately, I have a good accountant who is willing to go through those pains so that we can get a better rate. And actually, we are increasing. We're getting a good improvement on the rate, and at a good time too. So
So you went to what, 80% LTV, and what percent?
yeah, I think no. So I couldn't. I I didn't cash out refinance. So there's actually more equity trapped in there that I could take out, because if I wanted to cash out refi and take some out, it would reduce the it wouldn't be as good because the rates wouldn't be as good as if I just a straight out refinance with the same balance. So to your point, Lane, I do have more equity trapped in the property than I
Are you
wanted
done?
to.
I mean, dude, you want to take the equity out, because if not, like, you
Yeah.
just made the lender 1% origination fee.
Yeah. So that's another thing too. We're going with a national brokerage, so we're doing a bunch, right? So they say, okay, you do four, we'll waive the fees on the fourth one, something like that. So
Well, they always say those what they do is like, okay, what was your interest rate on that?
one is 299, and the other is 3.5 because it's a fourplex, so it's more risk. Yeah.
Okay. I mean, you could have gotten a 2.5, right? But then they bump it up, take their fees that way, and they
Right.
tell
Right.
you, oh, it's a no fee
Yeah.
loan.
Well,
But
the good thing is we just locked it in recently, and the rates are kind of going up. So no, I totally get it, Lane. That's the thing with the
yeah,
refinance. To your point, is a lot of times the fees get buried because they just say they're gonna roll it into the loan. So you you don't really realize that you're getting beaten up that way.
yeah. But so you amortized it, spread it over again over 30 years. So the payment obviously went lower, but like, what was the original interest rate you had that stuff at?
Oh, we're actually, for those, we're kind of high. We're above five. We're like five and a quarter, 5.5. It was kind of high. So I think it made sense, but yeah, to your point, it wasn't the most optimal use of our equity. So
How long did you have in the amortization schedule left?
we probably bought those properties within the last 3 years. So it's not
Oh,
like a
okay.
big reset. Not a big reset. Yeah, yeah,
Okay. So it had still like 26 years
yeah,
left.
yeah. So
So people listening, what you need to do is like ask your lender, hey, price me out with a 26-year amortization schedule, and compare that new payment to the old one.
right.
and then see if it's really cheaper. If not,
Yep.
your lender just pulled a fast one on you, just snuck
Right.
in his fees, so you got paid, so you could go golfing this weekend.
Yeah. Yeah. And then,
Right?
a lot of times you want to figure out what is your break even point, right? So after the fees, what when is the break even point of the reduced rate, right? To your point, Lane, and you don't know when you're gonna divest. So if it's like a I mean, I don't think it'll be like a 5 year break even point for most people who are trying to refinance. But if it is, then you might want to reconsider because maybe it makes more sense just to pound down that principal or something, if that's what you're trying to do. So
Yeah, but if your rate was like a point and a half higher, I think what you did was right. But I think you should have just taken that money and put it on your mattress, or buy lumber, one of the two.
oh yeah, lumber. Dude, talking about lumber, yeah, that's inflation on lumber is getting crazy, man.
Yeah,
Like the price of a 2x4, not only here, even in the mainland. Yeah.
yeah. Tell me about it. But all right, guys. We'll see you guys next month. Tell your friends, and if you need help, let us know. Bye.
Bye.